let's just be super clear. Most people don't have 20% down. Like that is not a thing that is common. And so the mortgage industry realized this a long time ago and sort of tried to modify the guidelines in such a way that we can get people into houses with significantly less money. So FHA's minimum required down payment is 3.5%. Fannie Mae and Freddie Mac, which is a conventional loan, their minimum required down payment is 3%. There's just like gobs and gobs of products out there that can help with all sorts of different situations. And that's one of the reasons why I have a job, right?
Live love New Mexico, where dreams take flight. In this land of sunshine, our hearts ignite.
Welcome back, everyone, to Live Love New Mexico, where we keep it real about real estate in the land of enchantment. I'm Samuel Anderson, and today we're diving into something every buyer thinks about and usually panics about: financing. There's a lot of noise out there about credit scores, down payments, paperwork, and whether that new car you bought last week might have killed your mortgage chances. And today we're going to cut through all that. Joining me is our amazing realtor from the Venturi Realty Group, Melissa Romero. Welcome back, Melissa.
Thank you so much. It's great to be back.
And joining her today is her expert guest host from Primary Residential Mortgage, Joanna Rushing. Say hello, everyone.
Hey there. Thank you so much for having me on today.
All right. So Melissa brought me a whole list of a lot of common questions. So I'm going to kind of let her run the show today as far as asking you the questions and getting your expert insight. So let's get started with breaking some myths. So first out of the gate, Melissa, let's talk about credit scores with Joanna. Go ahead.
Yeah, a lot of times I have a question when I'm talking to a buyer, and their question is, but I don't have a 720 credit score. Can I still buy a home?
Yeah, that's a common misconception that we get a lot of times, that your credit has to be pristine in order to buy a house. And really, the long and short of it is that it doesn't need to be pristine. It needs to be okay and not totally in the dumps. But FHA actually allows us to go down to a credit score of 500, which a lot of people don't realize. And between a credit score of 500 and then 579, we can get away with a down payment of 10%. Now, once you get over that 580, then we get into some much more lucrative products like an FHA with the minimum down payment of 3.5%. And then once you get over about 620, then conventional loans open up for you too. But really, I mean, I've helped buyers in the mid 500s get into houses.
Now, what if somebody has a credit score of 579? They don't have that 10% down. Can you help them get their credit score up so that they would qualify for that lower down payment?
Yeah, so I wouldn't be able to fix their credit for them, right? I'm a big believer of leading a horse to water and not, shoving water down the horse's throat. But I definitely am going to help you kind of figure out what the path forward is, how to get your credit up, and to take the steps that are necessary to sort of put you in the best financial situation that you can be in order to buy a house.
Got it. Well, thanks.
And Joanna, just to kind of piggyback off of that, just as somebody who's kind of listening to this from a layman's point of view, I know that I've heard Tigo and the rest of the group kind of talk about that there are programs out there that can help you get started. They can help you get prepped up to the credit score that you need. Can you talk to us about some of those programs that might be out there?
Yeah, so I don't know that it's programmed specifically, but it's really more understanding how credit works. And what I find a lot of times with people who have lower credit scores is that they don't know how credit works. They don't know kind of what goes into a credit score, what goes into how that's reported, and what's beneficial and what's not. So that's something that I try to educate my buyers on, just from a very basic level. Stuff like making sure you make all your payments on time. It's amazing how immediately a late payment can affect you. Stuff like keeping the balances on your credit cards under 30% of the available limit. Once you get over 30% of the available limit, it starts to actually hurt you rather than help you on your credit. So simple things like that. Also having diversified credit. So maybe having an installment loan and a credit card debt, something like that, to show lenders, any potential lender, not just a mortgage lender, but to show lenders that when credit is extended to you, you are the type of person that then will follow through with the terms of that credit.
Awesome. Great info there. I think a lot of people stop before they even get started because of that number alone, the 720 score. So thanks for kind of clearing that up for us. All right, let's move on to our next myth, which is the 20% down payment. Melissa, go ahead.
Yeah, the second, I guess, hurdle I have people come to me with is saying, I'm ready to buy, my credit's good, but I don't have that 20% down to purchase a home yet.
Yeah, so that's a huge one and something that we run into all the time. Let's just be super clear. Most people don't have 20% down. Like that is not a thing that is common. And so the mortgage industry realized this a long time ago and sort of tried to modify the guidelines in such a way that we can get people into houses with significantly less money. So FHA's minimum required down payment is 3.5%. Fannie Mae and Freddie Mac, which is a conventional loan, their minimum required down payment is 3% if you're a first-time home buyer or 5% if you're not. So really big difference than 20%, right? Like totally different. And so not only that, but we also have other programs that will either offer you a 0% down payment or where we can finance the down payment in such a way that we are able to give you down payment assistance, which essentially creates a 0% down payment to you as the consumer. There's just like gobs and gobs of products out there that can help with all sorts of different situations. And that's one of the reasons why I have a job, right? I'm able to help these people understand what's out there and be able to kind of work within the framework of what they have as a unique individual. But no, to dispel the myth, you do not need 20% down to buy a house.
I thought it was really interesting when I first got into real estate. I was always just under the impression that there's an FHA loan and a conventional loan. And I didn't realize that there were so many, like, I guess, subcategories of those that you can fit into, that it's not just a cut and dry. How many different programs do you guys offer?
Yeah, that's also a really good question. Primary Residential Mortgage, who I work for, we have about 300 or so different loan products. Now, they all fall under sort of similar umbrellas. So we have conventional loans, and then we got a bunch of different types under that. FHA loans, a bunch of different types. USDA, same thing. VA, same thing. Then we have a bunch of stuff that's called non-QM, which is like weird stuff, bank statement loans and not stated income. We don't do that anymore. But a bunch of other kind of outside the box, we call them non-QM loans. But yeah, we've got probably about 300 different products. I would say on a day-to-day, I probably use about 10 of those.
Okay. And then could you tell us real quick what a USDA loan is?
Yeah, so USDA loan is a loan that is specific to a region or area. So USDA, the actual agriculture department, sets the parameters for what is considered rural, okay? And anything that's within those rural areas is eligible for a USDA loan as the house. You still have to qualify as the individual, but the house would be eligible for a USDA loan provided it's one of those designated areas.
Got it. Thanks.
Yeah.
That's great information. And just to kind of piggyback on this, I know I didn't ask you this ahead of time, but I have a feeling that you'll be able to answer it. When we talked about this topic with Lisa and Sonia, I asked them, what if somebody does have 20%? Is it best for them to put that down as a 20% down payment? Or can you tell us about some of the other things that they might be able to do if they had 20% to be able to put down?
Yeah, so that's a really interesting question because there's not a cut and dry answer. For some clients, putting 20% down is absolutely the way to go. For other clients, it may not be. I'm a big believer that you should not put all of your money into your house. I think you should always have a nest egg that is going to sort of be there for all the wonderful things you get to now deal with as a homeowner, right? So for instance, I've owned my house for about 5 years now. My water heater, it turns out, was 27 years old. Guess who got to shoulder the expense of replacing that water heater? Me, because now I'm my own landlord. Well, if I had put all of my money into my house and had no savings, then I would be trying to figure out a different way to replace my water heater, or I'd be taking cold showers for a while. And quite frankly, neither one sounds great. So when you only have 20%, I often counsel clients, hey, let's see if maybe you can hold some of that back so that you can, have a little bit of a nest egg that's going to help you be prepared to be the new homeowner. Then I have other clients who they've got enough to make a 50% down payment. And they say, well, I want to put 20% down to avoid mortgage insurance. And sometimes what makes more sense for them is actually to put a 25% down payment because they may get a better interest rate or lower fees if they make a larger down payment. Back like in the day, you had to have 20% to put down in order to buy a house. And what we did as an industry was we basically said, instead of having to have 20%, if you make less than a 20% down payment, we're going to require you to carry mortgage insurance from the for the interim, basically between whatever your down payment is and 20%. And the mortgage insurance protects the lender. And a lot of people say, well, that's money that's wasted. I wholeheartedly disagree. That's money that allows you as a consumer to get into a house with 3 or 5 or 10 or 15% down, rather than having to come up with 20% down, which is quite frankly cost prohibitive for most people.
So the best thing to do is just talk to you as a lender and find
Yes.
out what strategy is going to work best for you.
Absolutely. And you want to work with a lender who has your best interest at heart, right? Because you can talk to any used car salesman who's going to sell you whatever they've got on the lot, right? That's totally different than what I do. I'm going to sit there and say, yeah, I've got 300 products and I can qualify you for this. But at the end of the day, you got to make the payment, not me. So I want to help you figure out not only what you qualify for, but what's actually comfortable and feasible for you as well.
That's great. And so speaking of contact information, let's do a little bit of housekeeping. Joanna, how can everybody get a hold of you if they want to give you a call and have a conversation with you?
Yeah, so I am painfully available, which is what I like to say. You can reach me on my cell phone. That's usually the easiest. 505-917-6102. You can call me, you can text me. If I don't answer, please leave me a message. I am always going to call you back. My email address is jrushing, like rushing out the door, at primeres.com.
Great. And Melissa, how can people get a hold of you if they want to give you a call?
My information's below. Go ahead, text, call, or email me. I'm happy to help in any way. Facebook, Instagram,
Perfect.
I'm all over.
And if you want to follow the Venturi Realty Group as a whole, you can go ahead and check us out online at welcomehomeabq.com. You can also follow us here on YouTube or wherever you're getting your podcasts. Our channel is also called welcomehomeabq.com. All right, so let's get into our next segment, which is titled Employment Rules and Deal Killers. So let's switch it up. Melissa, you said this one comes up a lot. So why don't you go ahead and take over and let us know what this is all about?
One of the questions that I have gotten quite a bit is on both ends of the spectrum. Oh, I haven't been in my job for 5 years. Can I still buy a home? Or, oh, I don't have a job. I want to buy a home. So there's
Yeah.
got to be an in between.
Well, you'd think. The short answer is you have to have a job history for at least 2 years. Now, the way we define that is kind of unconventional, for lack of a better term. We consider job history not only the time that you were part of the workforce, but also we consider secondary schooling that's related to your field. So if you are, say, a doctor and you just completed medical school, but you haven't worked for the last, however many years you've been in med school, and then you go get a salaried position at a hospital or something like that, well, we can actually say that even though you haven't been working in that hospital for 2 years, we can consider your time at medical school, provided you graduated and are now working in that field, as part of that 2-year job history. So that helps a lot of people out. I mean, I've even put people in houses where they didn't start until after we closed the house because we had a valid offer letter and we had that 2-year work history or school history. So no, you don't need 2 years. You also don't have to be at the same job for, any sort of defined amount of time in some cases. So this is where it really benefits you to have a lender who knows what they're doing and knows the guidelines, right? Because FHA has different rules than conventional has different rules than VA, so on and so forth. And so for some buyers, if you've got an offer letter in hand and you're going to start, I think we have one right now where he's going to start just a couple weeks before closing, and he's probably not going to get a pay stub before closing. And that's okay. We can still help him out because we can meet the rest of the guidelines. Some of the other ones that kind of trip people up, FHA has a rule that if you have been out of work for over 6 months within the last 2 years, you have to be at your new job for at least 6 months going forward. That's the one that trips most people up, is just making sure that you're following the guidelines. That's really the majority of what I end up doing.
Great. And so on the flip side of that, the other part of the segment is called Deal Killers. So why don't you all discuss what not to do when it comes to financing before you obviously complete your deal?
Yeah, so there's a lot of things it feels like, but really the main things are maintain your credit and maintain your financial situation. So don't go out and buy a new car. Don't get a bunch of new credit cards. Don't co-sign for your kid's student loan. Don't change your credit in any way by getting new credit liabilities. If you have to, because life happens, right? Talk to your lender first. Make sure that you understand the impacts of signing up for that new Home Depot credit card or buying that new Tesla or whatever you're going to do. Life happens. We understand that. But I've had people who have bought cars and then they couldn't buy a house because they did it in the wrong order. Mortgage lenders are significantly more aggressive in the way that they look at your credit than anybody else. So it's much easier if you can buy the house first and then go buy the car or the credit card or the towels.
And when we say buy the house first, that means close, got the keys,
And then wait
everything's
one day.
done. Yes.
And then you go buy all that fun stuff.
Not
afterwards.
just you wrote an offer and it was accepted, so you
Correct.
bought a house.
Exactly. Yeah, so those are kind of the main things that we say to watch out for. Try not to change your job in the middle of it. We do have people who do it, but again, talk to your lender first. Really, I think the biggest takeaway I would say here is make sure that you are letting your lender know what's going on, because we can help you navigate through all kinds of stuff if we know. If we don't know, it's a lot harder to advise you, and it's a lot easier to get tripped up in a way that we can't fix.
I think one of the things that I have also learned in this, being in real estate for so long, is that you as lenders pull a buyer's credit again before they close to make sure that there are no new credit cards open. And also you do verify their work history to make sure they still are employed.
Yeah, so not every lender pulls the credit again at the
Okay.
end. We do something slightly different where we're basically monitoring your credit through the whole transaction. So if you go to JCPenney's and sign up for a new credit card, we're going to know about it. Other lenders will re-pull your credit, usually on a soft pull right before closing to make sure nothing's changed. But yes, we do check your work history. Again, we call your employer and say, hey, they're closing in about a week. We want to make sure they're still employed. And 90% of the time we get a yes, but we have gotten no's before. And those people didn't buy houses.
I've had that happen to me. I
Same.
was working on the seller side. The seller signed the day early.
Oh boy.
So she had already signed. We thought things were great. And then I get a phone call from the other lender saying, hey, they checked her work history. She was a nurse. She quit her job to become a traveling nurse
Oh,
because she
man.
thought that was, well, that's what she wanted to do. It made more money. So she thought it would be the same thing. She's still in nursing, but it's very different.
Very
apparently.
different. Yeah.
Yeah. So we didn't get to sell that house
Oh,
by
that's a
one
bummer.
couple days.
Yeah, but it happens.
It does.
And there's a lot of stories like that, unfortunately.
I mean, few and far between, luckily,
Yes.
with us, because I feel like we're pretty good at advising
Mm-hmm.
our buyers on the importance of maintaining. So
Right.
luckily, it is few and far between, and it happens.
It does.
All right. Well, it might not have sounded ominous, but that was a great little setup for a segment that's going to be coming up. So keep those little anecdotal stories in mind. But until then, let's move on to our next segment, which is called Local versus Online Lenders. All right. So now let's get into something that we preach around here, which is the value of working with a local lender. Melissa, set the scene for us, please.
Yeah. So I like to tell people basically we're a team. It's not just me, but like you and I talk. You give an update every week about how the loan's going. I know that I can call you throughout the week, evenings, weekends, if I have a really important question, and you're going to be able to answer it. And you know the buyers. I don't have to give you a case number, a file number, and wait for you to look it up. I can call and say, hey, John Smith. And you're like, yes, I know what's going on with his file, because you're just as invested as I am, as they are.
Absolutely.
But on the flip side, I have had issues come up, and I've called that lender from Rocket or Quicken or whoever else, and I don't have the authorization to talk to them yet, or I don't have their file number. There's different situations that have come up where it's made it incredibly difficult. Now, one of the things that I have had to have as an obstacle come up with them is, well, their rates are better.
Yeah, so this is a pretty common thing that we hear, not all the time, because I think a lot of the real estate agents that I end up working with, and a lot of the very good ones in town, which includes very much so the Venturi team, is they know the value of a local lender and they know the value of good service. And so there really is, there's a big difference. And I think people don't realize that. A lot of people think that the only thing you're looking for from a mortgage lender is the rate. And I couldn't disagree more. The rate is important. Don't get me wrong. Absolutely, the rate is important. The rate doesn't matter, though, if you don't get to closing. And so that's what we find with a lot of these online lenders is that to them, you're just a number. They don't care that you applied. They don't care if you close. They don't care if they call you back on a weekend. They don't care about you, quite frankly. You're just a number to them. Whereas the approach that I'm taking is, like you said, it's really more of a partnership. So I see you and I as two sides of the same coin. You're the house, I'm the money. You can't really buy the house without both of those things. And so I'm always really invested in getting your clients to the finish line because they are also my clients. And quite frankly, we both work on referrals. And so if you do a good job and I do a good job, we both have the likelihood of having more business come out of that. Now, beyond that, a local lender is not only going to care about who you are as an individual, answer your phone calls, get to know you, but they also know the market. And they also know the other players in this market. I've had clients who have had their offers accepted simply because the listing agent knew me, knew that I did a good job, and knew that we were going to get to closing correctly and on time, and they were going to get those updates.
Absolutely.
And it's invaluable, right? Because I've heard it go the other way too. I've heard some real estate agents, who I'm not going to name any names, say, I absolutely will not take a pre-qual letter from X, Y, and Z lender. And it's because service matters, reputation matters, follow through matters. And those are things that not only the Venturi team preaches, but I preach as well. And those are big deals to me. So I'm a huge proponent that, yes, you should get a good deal and you should get a good interest rate. But you have to understand that if you go to the absolute lowest rate, you're sacrificing something somewhere else.
One of the things that I think is important too is if it is that much lower than everybody else, you're probably paying for it in some sort of a fee that's just not getting disclosed to you up front.
Yep.
Whereas most local lenders will disclose, hey, here's our fees, here's what this is going to cost up front, instead of like a surprise at the end where it's like, whoa, I didn't know I was paying for that great interest rate.
Yeah, absolutely. And I try to be very, very transparent with my clients and let them know, hey, this is what we're doing. This is how it works. This is why it's the way that it is. I answer all kinds of questions. Sometimes they seem like they're maybe silly to the person that's asking them. But my first day at a mortgage company, I said the words, what's a mortgage? So I feel like you can't get any dumber than that. And that was me. So
look at you now.
Moving right on up. So, I mean, I think it's really important just to work with somebody who has your best interest at heart.
Awesome. Great information. So now let's move on to a little segment I teased before the last one. And I really want to get some real life stories, some real world stories from you all, because you guys are out in the field and we'd just like to see some of the proof behind the pudding you guys have given us. So we're going to call this segment The One Thing That Almost Blew the Deal. And so Joanna, why don't you go first? What's one thing that nearly derailed a closing?
So Melissa and I were working on this deal together for this very nice gentleman. And I was in the car on my way to closing at 8:30 in the morning or whatever. And I got a phone call from my assistant. And she says, Joanna, did you know that he opened a new credit card? And I said, what? She goes, he opened a new credit card. I said, I'm on my way to his closing right now. How could he have opened a new credit card? She goes, I don't know, but we got an alert. And he absolutely 100% opened a new JCPenney's credit card. So I'm 2 minutes away from the title company where this guy's supposed to close on his house. And I'm thinking, well, that's not going to happen because now we've got this fun new thing to deal with. So I roll into the title company and I stop at the front desk and I say, can I have a piece of paper and a pencil, please? And she said, sure. So I walk into the closing and I'm like, hey, Mr. So-and-so, congratulations. I just got a call from my assistant. I understand you opened a new credit card and we need to deal with that now. And he was not terribly happy with me, but we lucked out because he had bought some towels at JCPenney's. They had offered him a discount if he opened a credit card. Please don't do this. He had opened the credit card and as luck would have it, he had the towels and the receipt for the credit card and the towels still in his truck. So I slid the piece of paper in front of him and I put, this is to confirm that I opened a new credit card with JCPenney's on this day. I had him sign it. I immediately sent it off to my underwriter, got the receipt from the towels that he still had in his car, was able to get that off. We got his credit report updated, and fortunately it didn't impact the closing in such a way that we couldn't close. But we were very close to not closing that day. And that was one that I always remember thinking, boy, we were that close to being totally dead in the water.
So close to being done. And he was so frustrated. He's like, I can't even just buy towels without anyone knowing. And we're like, yeah.
Unfortunately.
Yeah, not when you're making a purchase as big as a home. That's actually really great to know, because for people who have no idea about it, something as minor as that,
Sure.
because you don't even sometimes realize when you're doing it, because I'll get a discount just for signing my name.
Yeah,
And then all of a sudden it can ruin your credit. That's incredibly useful to know.
absolutely.
Melissa, do you have any examples you'd like to share with us?
I have a real life experience where unfortunately this one did kill the deal.
Mm,
You did everything you could to save it. He actually started out with an online lender, and this is another point in case why online lenders sometimes miss details that are very important,
Sure.
because we were more than halfway through with this transaction and the lender found out he had not had that work. He had a 6-month break, I believe, in his work history, which is one of the things that you were mentioning. You need to at least have been in the same industry. I don't know. Do you remember?
Yeah. So he had a break of over 6 months within the last 2 years, and he hadn't been back at his new job for 6 months. He'd only been there for like 4
4.
months or something like that. And so there was no way for anybody to help him because he didn't fall within the guidelines. They're federal guidelines that all of us have to follow. And I mean, this is going back to the online lender and why local is better. The online lender missed it because he was just a number to them. And you put it in front of my desk and said, can you do this? Is there any way you can fix it? I took one look at it and said, there's no way we can do this. All you had to do is pay attention.
I think you made a 5-minute phone call just to see if there was any other hidden surprises, and there wasn't. And so that was just one that I every day kind of realize you think things are going great until they're not. So that's why who you work with matters.
Absolutely. And I mean, sometimes I've even got a deal right now that, was going swimmingly, and then we got some new information at the 11th hour. And I have been working tirelessly, honestly, to get it fixed right now. And we're at the point where he's still going to buy the house. It's not a denial. It's a little bit of what we call a restructure, but it's not a denial. And you don't always get that from an online lender who doesn't care whether you close or not. It makes a big difference. Who you work with matters.
Great. That's great to know that there's so many things that can kill your deal. But what actually I did take away from that is that just that you kind of have to have a laser focus. If you're buying a house, buy the house and then buy the furnishings and the furniture and everything else after the fact. Don't try and do it all at once.
Absolutely.
I would tell buyers a lot of times, because we're in the house and it doesn't have a washer and dryer, and they're like, oh, I can use my Home Depot card. I'm like, no, let's make sure that we don't put the cart before the horse.
Exactly.
And it's hard because you're excited. You want to get on Amazon and you want to buy the new curtains and
Right.
you want to buy the new bedspread and everything that goes along with it.
Was especially if, as you pointed out, you may have like had the deal, you've agreed on the deal, but you haven't closed the deal yet. But in some people's minds, they don't understand that those are two different things. And so they think, oh, I've purchased a house, as you said, now I can go out and get the furnishings and get the laundry. And so it really does sound like it really is important for them to understand the deal's not done until it's done and you've got the keys and you're moved in, or at least you're ready to move in. Is that correct?
Exactly.
You don't count your chickens till they're hatched.
Exactly.
There it is. The old ones work perfectly. The old cliches work perfect. Alrighty, so that's going to pretty much wrap us up for the day. We got one more segment left, and that is going to be, of course, our Around the 505, where we like to be the guides and let everybody know where we like to go and hang out around the 505, because we got boots on the ground all over the place. So since we've been talking about saving deals and crunching numbers, let's wrap it up with a little bit of fun. Joanna, we know that you put on a great happy hour, and so what better thing to do than to ask, where are you sending people for the best happy hour in town?
So New Mexico and Albuquerque specifically has an absolutely excellent craft beer scene. So I'm a big fan of craft beer, and my go-to is typically Bosque Brewing Company. They got a bunch of locations around town, but my favorite is definitely the one up off of Eubank and Spain, Bosque Heights. They got a great patio. It's a nice big open concept inside. They got a cool vibe in there. Music's always good. Staff's awesome. Beer's great. Food's wonderful. I can't say enough wonderful things about it. And then also, I really like Bosque Brewing out in Bernalillo as well.
Oh,
The
those
view from
views.
that is just stunning with the river and the mountains. I mean, it's perfect. That's
Love-
where I like to go.
Love that, Melissa. And I know you've got little ones, so you celebrate happy hour with a little sweet treat rather than an alcoholic beverage. Where are you going for that?
Absolutely. This weekend, we're going to do Bahama Bucks.
Oh, yeah.
It's shaved ice. You can put ice cream in it or you can get cream on top. My kids love going there. There's several locations in town. It's just a good time.
Good call.
Awesome. Sounds great. Okay. So that's going to do it for episode 5 of Live, Love, New Mexico. Huge thanks to Melissa Romero for steering the ship today with today's questions. And of course to Joanna Rushing for being such a killer host and dropping knowledge left and right. If you're listening and realizing you're ready to stop guessing and start planning, you know what to do. Reach out to us today at welcomehomeabq.com, or you can call us at 505-448-8888. That's 505-448-8888. Whether it's your first home, your next home, or you're just trying to figure out what's possible, we've got your back. And don't forget to check out our flagship show, the Albuquerque Real Estate Pod, streaming weekly on YouTube and all major podcast platforms as well. Until next time, everyone, live well, love where you live, and we'll see you around New Mexico.
Thanks for watching the video all the way to the end. We appreciate you. And please click subscribe. We'll keep you updated on what's going on with real estate in the Albuquerque area and New Mexico, and of course, across the entire country. Have a great one.